Hello, Dorlin. So the S&P 500 is the US stock market. And sometimes people ask me, what do you think about rotating crypto profits to stocks? And I say, please hold your horses. I have some very delicate and sensitive information here for you. So I want to know, how does the stock market perform when it tries to beat inflation? Have a look at this. Another way of charting SPX over M2SL. Now, SPX is the S&P 500 code on TradingView, and M2SL is the money supply. So what you want to do with this chart, all it does is it goes, hey, tell me how the stock market has performed over time, but I want you to remove the money printing cheat effect. Show me the real numbers. So I even explain here in the brackets, it's a stock market adjusted for money printing. So another way of charting it is you can check the S&P 500 real yield. But I want you to know, when you use real yield, what they do is they deduce inflation from the government report. And they say, oh, inflation was 3% this year, so they'll discount it by 3%. But if you're a little Habibi Albi and you love eating tabbouleh on Saturdays like I do, then you'll know that their inflation numbers are completely rigged. Completely. So you can't use their inflation. I prefer M2SL. I prefer looking at the money supply. But you don't really need to know the details. You just know you're getting scammed anyway. It doesn't matter. Okay? So let's look at this. If you adjust for inflation, which is the real yield, so you remove the inflation, we see that the stock market is absolutely garbage most of the time, and inflation wrecks you. So here I even tell you got to get some Bitcoin, Ethereum, strongholds, crypto. The upside is just too big. Don't care what the prices are. Have a look at this chart. This is the S&P 500 over time. Now, a lot of stock market macro people, they love looking at this stuff. They're like, oh, wow, look at these charts. You will be fascinated with how much time the stock market people waste on long-term charts, intricate details for stocks, considering the absolute garbage returns they give compared to crypto. You will be amazed. You're like, you are wasting all your time for this little yield? Wow. So we can't look at them and laugh. I want you to know that they're our time machine. Crypto will eventually have too many nerds, too many casino lovers, too many normies. Not enough illicit substance takers. We'll be out in the corner with our hoodies on, you're shaking and shivering, you haven't slept in 3 days. If you see a lot of that, we're still early. You're the downtrodden of society, the outcasts, the fringe. But when you start getting people who they shave, they're shiny, they use full stops at the end of their sentences, those types of people, and they type with capital letters here and then, now you know the returns are getting lower. And when you start to see swap costs, so when crypto starts costing you less and less, unfortunately, friends, you think, oh, great, it's getting cheaper. Nope. You know what that means? It means the number of people in the system, it used to be like a value of 10. Now it's a value of 50. So that company that's offering swap rates of a certain price, or the DEX, they can drop their prices by a factor of 5. So you're like thinking, wow, it's 80% cheaper. Not so fast. It's only 80% cheaper because you're not competing with like 100,000 people anymore. You're competing with 500,000. So they will make up the same money or a bit more with volume. This is not what you want to see. You want to see big, giant, fat spreads in crypto. That's what you like to see. You like to see big costs. Then you one day, the juicy times will end. And this is the S&P 500. Super efficient. Everybody's looking at this. Look at this over time. So this is the real yield. Look how disgusting this is. This is the zero line. Look up. I'm just telling you right now, man. Like, crypto friends, like some of you guys, girls, baby dolls, and ducks. I am telling you right now, don't you dare tell me that a 50x is small. Don't even tell me 30x is small. Don't even tell me 10x is small. You're not going to convince me. Look what they're out here fighting for. They're fighting for 2 to 5% on top of inflation. So don't tell me 10x is small. You got to get more aggressive. And if you don't get more aggressive, I'm here to show you, I'm here to tell you, 99% of you listen. It's the 1%, you're not listening. Why? You got to hunch back. You got to hunch back. You're not paying attention. You got to remember, this game is not about what we want. The reality of the situation is everyone knows that there's edge in crypto. Everyone's ears are perked up when the prices come up. Everyone's clip size, bullet size, portfolio size is drastically getting bigger over time because the institutions are slow to come in, people get more confidence. That is not good. It helps to push our bags up, but it means they cap our rallies. Instead of doing the 10x, they're going to cap you at 2.5. If you don't believe me, you're going to find out the hard way. That's why you got to buy in the depression. Look what they're fighting for in the S&P. Look how garbage this is, man. This is the zero line. This is back to 1950. So congratulations. 70 years where you don't even know there's these periods where you're just minus 5 to 7%. You're losing to inflation. This was the dreaded 70s, by the way. Look how disgusting that is. But even if you forget the 70s, pretend we live in these normal times. Wow, congratulations. You are beating inflation. You're not even beating inflation most of the time. Most of the time, you're down minus 2.5%. You're losing if you look at the real one. This is disgusting. This is absolutely filth. What is this? 2% per year? I'm not even going to bother getting the calculator out. Like, you need a clip size of like $300,000 and you're like, yeah, about in 18 years I'll be able to make it. You can't do that. It's not going to happen. So this is why crypto, it's still a gift. The numbers are wildly large. We are still growing. There are still a large subset of people who are not in yet. They are coming in. But I'm telling you, I promise you, the next group of people, they're not going to be as silly as you think. They didn't respond to Bitcoin narrative, Ethereum narrative. They didn't respond to layer 1 chains. They didn't respond to DeFi gaming metaverse. They did not respond to privacy. They did not respond to the anarchy. They didn't even respond to Michael Saylor. They didn't respond, obviously, to JPEGs and NFTs. They don't even care about payment solutions. They don't care. So the new narrative they come for, it's something else. But all those other narratives I just went with you through, they gave a lot of euphoria. And they've been diminishing over time. So only God knows the next narratives, it's going to be another diminished return. What do I mean by that? The euphoria. If you calculate rough fair values of coins back in 2013, if you just go look at a basic Bitcoin chart, it went up above fair value by like 13x as a rough number. By the time 2017 hit, it only went up about 4.5x above fair value. In 2021, it's disgusting for me to say, it only went up about 80%. So not even a 2x above fair value. This is Bitcoin. Some coins were able to burst above their like some sort of fair value gauge by 2 to 6x, which is great, but it's also going to diminish over time. So you know what to do. You know what time it is. You're buying the depression. We're going to sell in the euphoria. But look what the alternative is. No, don't go back to stocks. The ultimate exit for our crypto bags is my prophecy, which is one day we will convince all the stock market boomers, most of them, that they've been conned for the past 10 years and they've got to come and FOMO buy crypto. That might happen. That might give a gargantuan crypto season like we've never seen before because these people got some big, big clips in their stonks. But maybe that takes until 2030. So it's big ifs and buts, but at least, hey, you know, there is a goal at the end of the day. The lion's share of the weak hands. But that might usher in like a 6-year bear market or something ridiculous like they did with the NASDAQ tech bubble in 1999. So before we get to that part, you're in now. You know exactly what's going on. Growing network effects. We are so much better than what the S&P 500 offers. Like we're not even close. What are you going to do with 3 to 5% per year, man? Nothing. So respect the 10Xs. You got to respect them. A 10X is beautiful. If you invest 1 year in your collected portfolio, 1 year of your income, a 10X will give you 10 years back. Come on, man. Like that's a lot. Doesn't even matter. It doesn't really matter. Yes, it's not 1,000x. And yes, it's not 500x. And yes, it's not 100x. But you got to appreciate the opportunity while it's here because it won't be here forever. Catch you next time, friends.